focus on the lesson. Live in the hills, but still get a spread. Started with a live, but still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Fingers to the down.
All right, you see this guy right here? This is inflation proof. He doesn't eat, he doesn't drink, and he doesn't use any fuel. Okay? For the rest of us, though, what inflation came out today, it was bad. It ended up missing expectations. A lot of people didn't expect this. Out of 66 economists, every single one of them was wrong, and well, we hit another new low. So, ladies and gentlemen, we got to talk about the downside. You know, really, where do we go from here? Can it go much lower? My sister asked, she's like, said I sell my house? You might start hearing this soon. A lot of people are getting very, very jumpy, but now the question is, where do we go from here, and what can cause it? So, I'm going to talk a little bit about the downside. We're going to go over what we saw today. I'm even going to show you something with some of the puts right here, because playing in this volatility, I mean, you really got to be a sniper, and even then, the rewards are not as high, believe it or not. But let me start it off with this. Today, after hitting another new low, we are on another 5-day losing streak, and now this is the biggest losing streak since March 2020. So let me take you back in time, and this is what it looked like. We were at like, what, 275 or no, 288, excuse me, and then within like 1, 2, 3, 4, 5, 6 trading days, we came down to 220, and well, this is the biggest, largest loss since then. It's not looking pretty, and now we are getting into the end of the week. We may very well end up with another weekly loss, making it about 6 full weeks of losses. And here's another fun fact. From 1928 until today, that has only happened 41 times. There's only been 41 streaks of 5 weeks or longer. So a lot of people are talking now, where do we go from here? Because even after that happens, the results on the market are kind of shaky. So hopefully you're used to all the bad news. We got a lot to talk about. It doesn't mean the rest of the week won't be exciting, but ladies and gentlemen, you are going through it right now. Welcome to the market. Some of you are earning your stripes right here, so let's talk about it. But as far as today, it was a wild one. Let's start with the CPI. I mean, why did we go down? We talked about the possible scenarios yesterday, and literally the month over month, it was higher than expected. It only came in at 0.3, so thankfully it wasn't like 1% like we got last month, but that still wasn't good because, like we said, if that keeps going up, it's showing the momentum from last month is still kind of carrying away, and then the core, this is the paradox, core actually went up higher. It was actually mind-blowing, and this is what got people worried, but that came in at 6.2, and then the year over year came in at 8.3. Remember, last month was 8.5, so technically last month was the peak, but people didn't like this because, again, most people thought this was going to come down today or at least chill out, but to get some of these higher numbers, I mean, this just holds more weight now into this whole idea of, yes, you may get runaway inflation, and on top of it, you also saw services start to go up a little bit, and now this is what had people worried today because commodities and like items, those were going up, but this time around now, you saw a decline in those, and it was a pickup in services, and that's now showing inflation reaching beyond just products, oil, energy, and all of that. And now that's another thing. Why could today be taken negative? Because in that CPI report, we found out that gasoline actually had a negative impact on CPI this month around, but we still went up. So think about that one for a second. That means last month they were saying, well, it was just energy and all of that stuff. So, you know, once that comes down, it'll be good. But now this month, we still missed expectations. It's still very elevated. And that is now after a negative month over month with energy and even year over year. So absolutely wild. Now let's talk about what the market did, because this was nutty, bro. This was very distorted today because as you see here, before the report, report even came out, you gapped up 4 points, 1%. You were already up there. And then right when the report came out, like we said, I said if month over month misses, year over year, and then even average hourly, that didn't do bad, but real incomes dropped, so people didn't like that. But then the services and core going up, that was even worse. But right when that information came back out, we sold off from 404 all the way down to 394. And then by the time we opened up, we were at like 398. And then the market launched up, came down a little bit, and then just took off. And then we were up by a big margin back to 404, and then we slipped. So why do I say this is distorted? Because when you look at this right here, this little Roblox chart we brought up yesterday, you could see it. Even though we had a negative reaction, it was saying it was a positive one, and that's based off of where we opened, not based off of when you got the report, and then it did all of that pre-market activity. So it was absolutely wild. This is what people were reacting to. There was a couple of Fed comments, and it kind of drove things here and there, but really, this was just the digestion. Bonds got a bid today, so that was both good and bad. We talked about that because it's like, okay, if people are buying bonds right now and you're watching the bond yields come down, that's not good because that means people want safety. But why can it be viewed as good? Because the last literally 6 months, all it's done is go down. Any sort of relief for chilling out is kind of what we want to see to get some stability. But this was overall just digesting all this. You even had positive China news, and that's why oil started rocketing up. If you probably noticed today, that's because China gave an update on their little COVID situation and the lockdowns. People took it as positive, but even then, that wasn't really enough to keep the market up. So here's the next big key now. That was what we saw, but it's all about the levels right now because now people are getting scared. Let's talk about the downside. What's going to happen? Is it going to crash? You know, I'm telling you, there's a lot of emotions right now. And, you know, I don't know if I seem panicked or scared. Some people say I am. Some people say I'm not. But, like, it's just, for me, what it's coming down to, what we have right now, this isn't enough to create Great Depression, financial collapse, maybe 1987, you know, quick flash crash up and down, maybe. But it's not as if right now, I mean, we've taken a lot of damage is what people need to realize. So what I was saying, though, and I think this is the best way to view the markets because we have to approach everything very humbly. That's why it's like you can't really write anything off. Right now, people are talking about the next range. They're saying 382 to 385. We've talked about the 385 level, but now once we're starting to come lower and get to where we started at 2021, people's imaginations are starting to run wild. But like I'm saying, anything can happen. Am I optimistic? Do I think maybe we break this streak and there could be some positive future returns? Yes. But I do also see downside. So what I'm trying to say is that anything could happen. The way the market is looking right now, even investor sentiment, and I really just think the whole world, this is just my opinion, but it seems like we're one medium or big bad event away from knocking this thing over. Like here, let me give you an example. 2008, you probably seen The Big Short, you probably hear about the real estate and all that, but what a lot of people don't realize is up until the stock market crashed, you actually had real estate declining since like 2006, late 2006, 2007, yield curve even flattened around there, and then they started correcting in like late 2008, 2009. So even then, here's the chart. You can see in 2008, we were like 156, or 2007, by the beginning of 2008, you're already down to like, what, 126 or something. It was about a 20% drop. You see that volatility kind of looks like today. Then you got the bounce up, and then around October, November 2008, and then leading in to 2009, that's where it got really bad. But this is what I'm trying to show you. The market was already down 20%. Real estate was already slipping and down 20, 30%. It was slowing down already, right? And then what happened? You had a giant bankruptcy. Somebody finally blew up. It was Bear Stearns, Lehman Brothers. You started to see the wave and everything started going down, but it was that next big event that happened, and that's where I think we are today. This is what I'm trying to say. We've taken a huge haircut. Things are looking weak. People are starting to doubt things right now. Everyone's going back and forth, but it's like, if we take what we have right now as is this enough to bring about '08 style or anything big? I don't think so. But if we get one bad piece of news or any sort of big bankruptcy, somebody getting washed out, whatever it may be, again, you could have an imagination with this one. That is where I think triggers it. So over pretty much the next year now, the rest of this year, that's what we're going to be looking for. So as far as downside, I think we're going to operate within a range here. Watch that key level again, 385. I think that might be the low, even 380 until something else happens or we get next Powell in June. But if anything is going to move lower, if people are really going to get panic again in March 2020, that 5-day streak, this one, I mean, it stopped the day after, but that's what I'm saying. It's like we might still go lower. It really just depends on how things play out. But even then, I'm taking a lot of confidence in where we started at 2021, that 380 or 360 level. So we'll see what happens, but pretty much now we are in an interesting not checkmate, but check position where if something does happen, a big default, anything, we talked about this with Evergrande. I mean, same thing applies to us, man. If anything like that happens, then we have a problem. So hopefully this helps you out. Hopefully it could calm you down a little bit. And again, control the emotions, man. We've been talking about it a lot. And overall, I just hope you guys realize, approach this market with humbleness. I hope you realize I'm trying my best with it too, because again, there's so much to talk about, so many things happening, so many counter opinions, so many people to talk about it with, right? Everybody is talking about it, but that's why I'm saying it's just anything could happen. Keep that in mind. Stay humble. Keep it small. And now let us talk about the plays and some of the puts and the quote-unquote rewards. So as far as the plays, I only made one play today. I did an Abivi. I grabbed a June contract. Only grabbed one, and I was hoping that the consumer staples, some of the defensive names could stage that rotation. And then they got like FDA approval on some stage 3 Crohn's disease drug they're working on. I was like, all right, let's grab one. Grabbed a $60 play. It went up, then eventually came back down. But besides that, didn't make any other plays. I mean, we were up, but that little weird opening, it threw me off because I had a plan this morning. I said, all right, if we were going to open up and it was a big one, I planned on grabbing puts. I said, if we were going to open down, then I pretty much was getting ready to buy calls after the first low that it set. But then looking at the ECMI and seeing how we were up pre-market, gap down, and it just made things wonky. The premiums, I couldn't find anything, and the weekly premiums were a lot. So even then, waiting for my opportunity on there, I think there's going to be good trade positions, but I've been saying here, I'm not liking the reward. You got to think about it. Option is literally insurance. You buy insurance in this event where things go down, you're in trouble, you crash your car, your house gets lit on fire, I don't know, whatever it is, but you want it to protect you, and the idea should be not to spend too much and to get a return. But we've been looking at these puts. I mean, a lot of people were bringing this up, and we were even saying, whether it's the EWGs, some of them our EWJs, we got 300-400%. I think they're running a little bit there, but even if you got in the money and even if you shorted at the very beginning of the year, the opportunities and what the risk reward is, it's not that good. But let me just show you this one. This is a yearly SPY 430 put. And now I encourage you to go look at some other strikes. And this is what I'm saying. You could look at the short term, you could look at the long term, and this is what you got to be doing and really see, okay, are things actually, is it worth the risk? This is why sometimes people sit out in volatility, or we wait a little bit until we get the trend. And, we've made a lot of plays all year, but this last 6 weeks, it has been very hard to grab the right protection, even though it's been going down. Yes, there is day trades. You could buy it, make 50%, all of that, but that's what I'm saying. This game of musical chairs, that's what makes it harder. But look at this SPY 430 put. So if you grab this at the beginning of the year, when the SPY was at 470 and you said 430 for 1 year out, I think it's going to get to the level, that's where we pretty much bottomed out on the first January dip, right? And right now at this point, 430 is about $40 in the money. Keep that in mind, right? But if you bought this at the beginning of the year, literally at the very top, it would have cost you about $2,500 for this contract. After January, it shot up to around $4,400, then came back down, shot up again to $4,500, came down to 33, back to 42, then dropped all the way back down to 24 at the end of March, climbed up a little bit, came back down around 26, and ever since April, had that big gap up in the premiums. You can see how big it's moving, but it's at $50. So that's not bad, right? But just imagine this, if you literally took a super far out the money trade and got a bunch of time, and even if it went $40 in the money, you made 100% in this volatility. That's just, I mean, you can make that on anything. This is what I'm trying to say. Not every insurance is good. Too high of a premium, too high of a deductible. If it's not paying out, this is going to be the problem, and this is going to be the difficulty. And now, do I think options are over? No. I'm just saying here, you got to keep this in mind and look at some of these break evens, and it's about finding the sweet spot. So with my option experience, I've learned it's like the short-term ones are very difficult during this moment. So are the long terms. There's going to be something in the middle that we are going to need to pretty much find the sweet spot where it's really not fully expensive or not. But this is the thing right now with this type of volatility, it's kind of priced very efficiently in the sense that these break evens, I mean, it means a lot. I mean, at that point, at that 24, you know, you bought that or 430 contract for 24, 25 bucks. Your break even is around 400 by the end of the year. But keep this in mind, pretty much how the options makers or the market makers have been pricing it during this time. It has been very difficult. So pick and choose, and then also at the same time, this is why some of the leaps here, they may be a good opportunity, but we're not really getting that activity on the upside. So keep all of that in mind as far as plays for tomorrow. I think these next 2 days will be interesting. We may start throwing out some of these weekly plays. Otherwise, I did like how the banks performed today. They were one of the best after the report, then they kept coming down. That's something I'm like going on and off if you've been watching the videos with it, but I like that. I like food and energy still. I think it's going to be a little uncertain and shaky. And then the one I really like no matter what, and this is what I've been coming down to, and it even shows with the Abivai play today. It's very simple. Some of those consumer staples or defensive like value names like Abivai, even Walmart, they came down a little bit, but like Abivai, even Coca-Cola, Pepsi, some of these may be good ones. We just need the right premiums and the right prices if we're playing options. But I like those because it could benefit if we get a rotation, and if not, at the end of the day, it's like it's something that could still perform good and has a little bit more appeal than not. So we will see what happens. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, you're earning your stripes right now, baby. No success is safe, but you get to be in the game, and you still got the opportunities. And no matter what is happening, it does not change what the future holds. And this could be a crazy chance for a lot of people. So I hope you're ready, Chad. Let's get it, baby. But I love you. God bless you. Go to the gym. Drink your protein. That's why it's there today. Okay, I love you. Good night. Get ready. We're closing out the week. I can't wait till we get to Friday. I think we deserve a Friday, man. This is crazy.